Hello and welcome to this very special interaction with Vice Chairman of IHS Markit as they get ready for a second year of CERAWeek, the India Energy Forum in Delhi over this weekend and the next week as well. Dr. Yergin, hi. Congratulations, first of all, for the second year of CERAWeek. And a lot has changed in the last 1 year. The prices, the global cues, industry dynamics, etc. How would you put all of that in perspective?
I think that what we've seen is the changes in the oil market, which are quite dramatic. A year ago, it was still looking at oversupply and low prices, and today we have a very tight oil market. And of course, on top of that is the question of sanctions. And so I think for this CERAWeek in India, it could not be more timely in terms of what we're going to address, because it's so important to what's happening to the Indian economy right now.
When it comes to India, as you mentioned, even the prices have been higher. We've seen the currency continue to slide 17% down for the Indian rupee in this year, and that has made the imports really expensive for the Indian markets. As a consumer country, where do you think India stands right now, and what should really we be doing?
I think India is in a difficult position on oil now because it imports 85% of its oil. And of course, with the slide in the rupee, as you point out, this is really driving up the cost. And energy is a very important factor in India's economic growth. So this is a really hot issue, a really serious and important issue. And we're going to have the key players, including the Saudi oil minister and the Secretary General of OPEC, at our conference. So I think it could not be more timely, and every word that's spoken there will be significant for India.
Oh, well, absolutely. And especially with the crude oil prices at a 4-year highs, what is your sense? Iran exports continue to decline. We saw 1.6 million barrels in September. That's come down to 1.1 million in the previous week. And, markets are anticipating that we could see some more crude being knocked off from Iran. What has been your sense about the Iran sanctions, the latest statement from U.S. about waivers, extension, etc.?
I think that this administration is determined to push down Iranian exports and wants to do it faster and greater volumes than under the Obama administration. And so I think the expectation should be that Iranian exports will be lower than they were last time there were sanctions there. And so that's coming at a time, it's just a few weeks away. And I think that nervousness, anticipation, uncertainty is very much on the oil price. In some ways, it seems to me, when we look at the numbers, that in physical terms, the oil market is balanced. But right now, it's emotionally unbalanced with the imminence of these sanctions, combined with the continuing decline in production in Venezuela and uncertainty about other parts of the world. So it's a dramatic turnaround from where the oil market was even half a year ago.
And the kind of statements that we have seen come in from Saudi Arabia and Russia talk about increasing production and assuring that they will be able to fill in the gap. Do you actually see that happening on the quality and the quantity front?
I think they're going to do their best. I came back from Moscow. I was there with both the Saudi and the Russian ministers, and I think they're both very concerned for stability in the oil market, not seeing these prices continue to go up. They're quite aware of the impact of high oil prices with weakening currencies on countries like India, and they don't see that as good for the world economy, good for them, as well as not good for countries like India. And so their message is that the supplies, they'll do their best, get the supplies there. What they do say is they need to see the demand. But what's of course happening now is supply chains are being changed in anticipation of sanctions. For instance, South Korea completely stopped in August buying Iranian oil, which meant that it had to go to elsewhere for oil. So we're in a very jangly period right now.
What would you say works best for India? Because I remember having the same conversation last year as well, that India's dependence only continues to grow from here. The crude oil volatility is something that we will perhaps have to learn to live with. So what would you say, the kind of progress that India perhaps is making? Are we in the right direction, and is the pace fast enough?
Under Prime Minister Modi and the Honorable Energy Minister Dharmendra Pradhan, we've seen an effort to change the investment environment in India. For decades, India had a situation that did not encourage investment, so it was losing out to other countries around the world that were bringing new supplies on. I think India needs to continue to make progress in attracting both domestic Indian investment and international investment and technology to develop its resources to reduce its dependence. At the same time, it needs to be more efficient in how it uses its oil and its energy. So I think it's, you know, you've got to move on both of those fronts.
Oh, well, absolutely. But Dr. Yergin, also...
And I should say, by the way, that we can see the degree of... can I just add? We can see the degree of international participation in this CERAWeek forum indicates that international companies are much more interested in coming to India and investing than they would have been 2, 3, 4 years ago. And that doesn't solve the immediate problem, which is a real problem, but it does lay a stronger foundation for the future.
And what's your sense really on the U.S. making statements on exemptions and waivers on perhaps Iran's sanction deal? Would you see India in that sense in a sweet spot really?
There's been back and forth on waivers, no waivers. I think the U.S.-India relationship is a very important relationship. It's evolved and developed over the last several years, and there's need to be realistic about India's position. Where it comes out in waivers in Washington and in discussions between New Delhi and Washington, we'll see over the next, really several days. But some sense, I think, that there will be waivers in circumstances like India would be a positive for the market in terms of lessening the impact of high prices.
Dr. Yergin, one question that almost everybody is asking and wants to know an answer about really is the crude oil prices going forward. What is your sense? Because international bankers, brokerages, oil merchants all have come out with all sorts of report, putting crude from 70 on one side to 90, even 100 on the higher side.
I think that really demonstrates, I think the wide range of estimates of prices over the next 6 months really demonstrates the uncertainty that exists. I mean, you could see prices in some circumstances continuing to go up depending upon how these sanctions apply, depending what happens elsewhere, depending with something that people don't think maybe much about, what happens with Venezuela, whose production is declining so rapidly. On the other hand, when we look at 2019, we do see more supply coming into the market. We see more supply coming from Russia. We see the United States, these bottlenecks that are kind of dampening down production growth being reduced. And so we see a picture in 2019 where this supply picture looks better. I think it's the next couple of months that are the really dicey and uncertain period, and why you're getting these very wide price estimates. And of course, you also have to remember, people forget price matters. So if price does go up, it's going to affect demand, and that's a factor that will readjust the market too. But right now, in terms of supply and demand, there's no shortage in the market. A lot of this, I think, really reflects nervousness and anticipation, uncertainty, and all the kind of political back and forth that's now occurring as we go towards that November 4th date when these sanctions are supposed to go into effect.
Oh, well, absolutely. But Dr. Yergin, would you say that the uncertainty would end on November 4th? Because, the markets, as you mentioned, so many fundamentals to keep an eye on. And then again, you have the OPEC and the allies meeting in December yet again. Are you assuming the agreement cut that they have in sense of output, would you see that going forward in 2019 as well? Would you see that happen?
The next few months are going to be very eventful. A lot of things are happening at the same time. I think that when the OPEC, non-OPEC get together in December, they'll be looking at the conditions in the market, and they're going to be wanting, in general, to stabilize the market and keep prices from shooting up. In addition to the Saudi oil minister, we're going to have the Secretary General of OPEC at our conference in New Delhi, and I think they're watching very carefully what happens, and they know that if prices go up, they pay a price for it on the other side when, in terms of what happens to the market. So I think the December meeting of OPEC and then OPEC and non-OPEC is going to be a meeting aimed at stabilization.
And, you know, the producer countries are saying what they are saying, but the consumer countries, including India, also did talk about on how they might dip into commercial inventories and maybe stop buying crude from international markets for some time. There could be a pause. But then do you actually see that happening with the kind of dependence that we have and with the kind of demand that we have? Do you see that solution even feasible, really?
For India, it really has to make its voice heard in the global market. One of the characteristics or reasons that our conference is taking place in New Delhi is because it's recognized that India is now very important to the global energy markets, and that we see very considerable investment going into the downstream of the Indian market from around the world, indicating its importance. And so India's voice is much more significant and important, and it's going to be listened to. And I know it's being listened to as I participate in discussions around the world.
Well, absolutely. And we, of course, will wait for more of that dialogue when the CERA week begins in the next week. But with that, let's go for a very short break, and we will come back and continue our dialogue with Dr. Yergin on what really can be the expectations around globe when it comes to the supply-demand dynamics for crude. India Energy Forum in Delhi between 14 to 16 October. Dr. Yergin, you know, we have talked about the crude oil prices, but we continue to also talk about the alternate fuels. India has invested a lot in solar panels. Electrical vehicle as a subject is something that has seen investments in a lot of technologies moving around as well. Is that any competition to crude oil, even as we've been talking about it for a couple of years now? Have things really changed on the ground?
It hasn't changed. The fuel mix hasn't changed. I think EVs are going to be a growing part of the automobile fleet. We did our big study we called Reinventing the Wheel about the future of EVs, and we think that in a couple of decades, a quarter of the fleet on a global basis might well be electric vehicles, but it doesn't happen overnight. But we do see the Indian companies focused on EVs, and we're going to have CEOs of two of the companies that are leading on electric vehicles speaking. But you need not only electric vehicles, the fleet doesn't change overnight, you also need to have reliable electricity supplies where people can recharge their vehicles. But I think in India, one of the big drivers is going to be air pollution to shift the automobile fleet, make it more efficient, make it cleaner, and to have a portion of it be EVs. I think air quality is going to require changes.
Really, yes. You know, I want to keep the next 2-3 questions on India yet again. In the last couple of months in India, essentially, we have seen fuel prices, petrol, diesel hit record highs almost every single day because of what the crude oil prices were doing and the rupee was doing as well. Now, with the excise duty cut, this being an election year as well, what direction do you think that the prices are headed into, and how would you really compare it with what's happening in the global markets, really?
It's always a difficult question for governments about what to do about pricing and taxing. And of course, India had moved away from controls. Now it's caught in this vice between the crude oil on the one side and the weakening rupee on the other. And it inevitably creates political volatility around that. And the question is kind of who pays for it? Do the companies pay for it? Does the government pay for it? Do consumers pay for it? And, you know, we've seen these issues of sort of price controls and subsidies are a very tough issue for many countries. And right now, India is caught in that because of having these two factors at the same time, and kind of this general problem of for many emerging markets of weakening currencies. I know that when this is something that again one recognizes that the kind of key decision makers in world oil see that happening, and they're concerned about it.
So where do you see the dialogue moving in CERAWeek this time around? Because we are looking at all the major oil producers, oil ministers, upstream, downstream companies being part of this. What really is the direction and dialogue this time around that you're looking to focus on?
There's a short term and the long term. There's the importance of the global markets to India and India's importance to the global markets. So short term, I think there's going to be an incredible focus on what's going to happen to oil prices, because you're going to have, the key people there, and this dialogue with India is going to be very important. I think longer term, there's also the longer term discussion of ensuring that India has a solid energy basis to support high economic growth for decades to come. And so I think we're going to see a mixture of very topical, near-term, urgent questions combined with very fundamental questions about India's energy future, which is really also India's economic future.
India, for the longest time, of course, has been importing from geographically viable places. But we've seen for the first time in last year, the U.S. exports come into the country as well. And that jump has been quite sizable. We've also seen Saudi Arabia increase market share, also increase premium for the Asian consumers. What is your sense, the kind of mix India is looking at in terms of quality, pricing and imports?
For India, part of energy security is diversification, and so that means supplies both from the Persian Gulf countries and also from new suppliers. And I think, I was just writing about this in the draft of my new book, I think that this energy trade between India and the United States, which never existed before, is significant in economic terms, in energy security terms, and I also think it's significant in political terms by creating a new dimension to the relationship between the two countries. And I think it's something that really contributes to the overall relationship. And so, a few years ago, you would have said, it's impossible, can't imagine India importing oil or natural gas from the United States, but it's happening, and I think it's a good thing for both countries.
All right. So going forward from here, what do you think will impact the crude oil prices? I understand the fundamentals have been strong, but so have been the speculative positions. There is so much money that is rotating out of WTI crude into Brent, and the kind of gap that we've seen between both the crude varieties. Is it going to be weather? Is it going to be politics, geopolitics, financials? What's your sense on where are we moving from where we stand right now?
When you talk about the future of oil prices, you're talking about markets, you're talking about politics, you're talking about investment, you're talking about technology. So all of those things come together. But I think one key development, you point to the gap between WTI and Brent, is the U.S. is bottlenecked right now. Its production capacity amazingly has outrun its pipeline capacity to move oil from the oil fields to the refineries to coastal shipping points. And I think if we see over the course of this year the bottlenecks in the United States fixed, that will have global impact on the market. Also, when I was just in Russia, there's a sense that Russia is going to be able to bring on significant new supplies next year, and that will be a contributor to the market. So those, I think that's what you should look for. But these kind of things don't happen overnight. But fixing those bottlenecks in the logistical system are very important. And of course, we will see how far down Iranian exports go, what ways Iran finds to get its oil out, not officially, and what kind of waivers. That's all going to play out really over the next several weeks. So as you said before, this is going to be a very eventful couple of months, a key moment in the history of world oil.
Okay. But while, of course, there are going to be a lot of factors, what's your sense on demand? We continue to talk on how Asia perhaps has the biggest demand, whatever increase in percentage of demand in the international markets. We've seen a considerable marginal incremental increase from that will come from India and China. Do you see that kind of growth continuing with the kind of cues or the global trade concerns that we're living with right now?
Yes, I think that Asia is the growth region. The U.S. imports from the Middle East, one's very large or very small. I think you see the exporters refocused on Asia. You've seen the investments in the downstream in India, which is a very big signal as to where they think the future will be. And so I think we're going to see basically all the international growth is going to come from Asia, and China and India loom very large. India imports 85% of its oil. China imports 75% of its oil. So as you have rising incomes, you're going to have increasing demand for oil, even as countries seek alternatives, even as they become more efficient. And so there's been a big reorientation of exporters to Asia. In fact, one of the most fascinating parts of this is the big growth market for U.S. exports is Asia as well.
Well, absolutely, Dr. Yergin, and there is so much to take away from this conversation on demand, supply, investments, global events. And remember, CERAWeek brings you these 3 days of dialogue in India, in New Delhi, and that's exactly what we will see, focus India as being the most important thing. Thank you so much for your time, and thank you so much for answering all the questions on crude in the international markets and on India as well. With that, thank you so much for watching the show, but stay tuned to CNBC TV18 for more news.